Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of January 20th through January 24th of 2025. We're in part one of our weekly trading game plan. Try to help you see how to make money trading Trump 2.0. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for January 20th through January 24th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas for this trading week, and you can find a direct link to this Google document in the description box below. We keep all of our weekly trading game plan notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plan notes documents. And you can also find a direct link to that Google Drive folder in the description box below. Welcome to Crow, Fairchild, and Nagam. Hope you all had a great trading week and are doing well. So firstly, we'll take a quick look at how the markets ended up on Friday. So we see we had a pretty much risk on, pretty exuberant run on Friday. All the indices were up. Dow up 0.78%, NASDAQ up 1.51%, S&P up 1%. So again, very bullish, very exuberant run the end of this week, as we'll see. We had 68% advancing, only 23 or 28% declining. We had 77% new highs, only 23% new lows. However, we still only got 41% above their 50-day, 59% still below. Got 54% above their 200-day moving average, 46% below. So although it's pretty exuberant, still got some weakness under the covers, but overall a very bullish day. And we see led a lot by the Mag 7, so driving the indices. So all the Mag 7s were pretty much up, with the exception of healthcare, Lilly down significantly. So healthcare was the most negative sector for Friday. Look at some of the news. Trump might get early win with gas prices expected to drop. Markets betting China will let yuan fall as Trump takes power. So we'll talk about weaker dollar, etc., stronger dollar, weaker dollar, Commerce nominating Lutnick, backer of Outlaw's favorite cryptocurrency. So we'll talk about the cryptocurrency theme. Rally depends on answer to real question about bond yields. Dow surges, S&P posts best week since following Trump's election. We saw oil had spiked up around 80. I think it broke above 80, retraced slightly down, back down to 77. Natural gas was up over 4. You can see it retraced back just below 4. Gold broke out above that 2750 mark and then retraced. Now it's got a range of 2700 to 2750. See, all the indices are pointing pretty strongly up. Yields had retreated a little bit and then bounced back up a little on Friday. So now we've got the 30-year at 4.84, 10-year at 4.6, 5-year at 4.4. So still elevated, but they did retreat from that 5% level on the 10-year. Although I hear people predicting that the 10-year may spike up to 5% again, so we'll see. We look at a breakdown of the major indices and then the technology components. And just a quick reminder, you can access these screeners in our notes documents and also in the screener sheets and our ETFs and Watchlist Google Sheets. So we'll talk about the reason for these exuberant bounces. Lighter than expected PPI data, and then pretty much inline CPI data later in the week. So we had an exuberant run in pretty much all the indices towards the end of the week. So you see Dow bounced up, gapped up, tested that 50-day moving average. Looks like that's going to provide some resistance. IWM, pretty exuberant run up on bond yield retracing, but not quite up to its 50-day moving average. SPY up above, broke its 50-day moving average. Again, pretty exuberant gap up bounce on weaker PPI, CPI data. Not so much the NASDAQ, but it's now got support from its 50-day moving average, so it's now up above the 50-day moving average. As we'll see in all the futures as well, however, all the major indices have made lower lows, lower highs, so we'll see if they can make a higher high or higher low. So although we did have that exuberant run at the end of the week, they're pretty much all in a downward trend. Look at the technology components. So again, exuberant pop in the ARCs. Again, downward trend, however, lower highs, lower lows. Bangs, not quite as exuberant of a bounce, but it did reclaim that pivot point of the previous high. But again, a trend of lower lows, lower highs. Semiconductors, not much of a reaction, did bounce up and test that lower trend line. It is above its 50-day moving average, but again, a much more muted reaction in semiconductors. Biotech doing quite poorly. I was surprised we didn't get much of a positive pop out of the JP Morgan Healthcare Conference this week. There was very little news, a couple M&A newses. We kind of expected more volatility in biotechs, really didn't get it. So there aren't a whole lot of positive catalysts for biotech. Down below its trend line, made a death cross, so a lot of negativity still in biotech. And again, unless there's some other M&A, et cetera, coming, not a lot of positivity in biotech. TQQQ just leveraged on the NASDAQ, and we can see the broader technology sector did bounce up. It's up over its 200-day moving average, got resistance from the 50-day moving average. So again, not quite as an exuberant reaction in the broader technology sector. So if we look at a quick breakdown of the groups and sectors and industries. So Friday, we see again risk on day, technology, cyclicals, basic materials, and defensive. So almost all the sectors were green on Friday, with the exception of healthcare. Weakest real estate and utilities for the week, however. Financials did quite well. The major banks reported earnings, had very positive earnings. So the financial sector did very well for the week. Again, basic materials rebounded, real estate, again, benefiting from the retracement in bond yields. Otherwise, generally more defensive. Technology towards the bottom. Again, healthcare the weakest. For the month, the only green sectors are energy and utilities and financials. So again, rotation, as we were talking about, so for the January effect, all of January, we've been expecting that rotation back into energy, back into basic materials, out of technology. And again, we're continuing to see that through the month of January. We look at the industries. See, uranium made a strong rebound on Friday. Silver, gold, all rebounded pretty strongly on Friday. REITs rebounded. Again, real estate rebounded on retracement and bond yields. Gold. Weakest sectors, some oil, some REITs, industrial REITs, mostly pharmaceuticals, again, healthcare, drug manufacturers. For the week, again, a mixture, oil and gas services, some REITs, steel rebounded. Again, REITs generally positive, real estate, silver rebounded again, gold, weakest, again, drug manufacturers. Although pharmaceuticals for the month, very positive, probably going into the JP Morgan Healthcare Conference. Oil, again, rebound back up to 80. Gold positive, silver barely positive. REITs generally negative for the month. And again, coal, coking coal, one of the opportunities we've been talking about and watching, we'll talk about again tomorrow, is coking coal stock. So I hope that all helps. Welcome, Walter Lyons. Thank you for joining us. Hope you had a great trading week and are doing well. Let me grab a quick drink and we'll go over the highlights of the economic data from last week, and we'll look at the economic data for next week. Just a quick reminder, as the important economic data comes out, important economic news, I try to capture it and post it in the Surf the Markets channel in our Discord as quickly as possible. Our Discord's free to join. Again, great source of real-time economic news, economic data. So you can see a capture important economic data, screenshot from investing.com, the raw data, also reposting any important economic news. So again, our Discord's a great source for real-time economic data, economic news. Also, you can discuss all types of trading, different trading asset classes, different trading styles. So we'd love to have you join our Discord. Again, free to join, participate. You can chat 24/7 with all your fellow BeachBum traders in our Discord, and also get real-time economic data and news. So some of the highlights from last week, not much Monday. Tuesday, I thought this was a little interesting. Small business optimism was up. So part of the Trump 2.0 trade, possibly small business. Then we got PPI data. It was weaker than expected. So the markets reacted exuberantly positive. So we see core down to 3.5, same as before, but expected higher. Month on month was flat. Overall PPI 3.3 versus 3.5, and month on month 0.2 versus 0.4. Ex-food and energy month on month 0.1 versus 0.3. So again, shows supplier inflation cooling, but it's still well above the Fed's 2% goal. And so again, although inflation is slowly coming down, I don't think that's a reason for the Fed to declare victory on inflation yet. Still well above their target. And Wednesday, we got CPI, consumer price inflation, again, slightly below forecast, so 3.2 versus 3.3 year on year. Month on month was in line. Manufacturing, pretty weak. Real earnings went negative, so again, CPI a little bit, pretty much in line, a little bit lighter than expected, but the market reacted very exuberantly to that data and pretty much ran, as we saw those gap ups and all the indices, and a run through the rest of the week. Friday was OPEX, January options expiration. So we expected a little more volatility. It was a major OPEX, as also the LEAP options, the year plus expired. So we expected more volatility, but we saw the VIX is actually back down in the 15 handle. So didn't really manifest itself. In a second, we'll go look at the rest of the economic data from last week, economic data for next week. Just a quick reminder, markets are closed on Monday in observance of Martin Luther King Jr. Day. It's also Inauguration Day, so the markets are closed during the inauguration. Also, we'll talk about some of the plans that Trump has for a whole barrage of executive orders that will probably come out on Monday. So we'll see the reaction when the markets open back up on Tuesday. Also on Friday, we've got the Bank of Japan's next interest rate decision. They're expected to hike. You can see via the link in the notes the schedule and expectations for the Bank of Japan's interest rate decision. This may trigger a further unravel of the yen carry trade again. So we might see a negative reaction and higher volatility, particularly in foreign currencies, on Friday. Welcome, Ketan, Alan Krantz. Thank you for joining us today. Hope you had a great trading week and are doing well. So if we look at the rest of the data from this week, Monday, got some bond auctions, a little weak. Tuesday, we talked about PPI data. Got Fed officials talking. Mortgage rates back up over 7%. So, bond yields were up close to 5%. So bond yields are up, or mortgage rates up to 7%. So very negative for the housing market. We talked about PPI data or CPI data, pretty much in line, maybe a little weak. Oil inventories declined, but less than expected. Again, we saw oil back up over 80. More Fed officials, retail sales. So this is interesting as well. Retail sales for December, a little below expectations. We got jobless claims, so a little lighter. So continuing claims, a little less than expected. Initial claims, a little higher than expected. And the average went down a little bit. So again, the job market continues to be resilient. And then the CPI and PPI data, we saw inflation slowly coming down. But again, nothing that would cause the Fed to need to cut imminently. I guess the odds of a cut, the next cut bounced up to like September and then retreated back to like June on the PPI and then CPI data. Retail sales positive, but less than previous. Natural gas storage down, but less than expected. Again, natural gas prices tending up. Weather's pretty cold. Building permits a little better than expected. Housing starts better. So despite the high mortgage rates, building permits and housing starts was positive. Baker Hughes rig count dropped a little bit. Total rig count dropped. So again, less supply. Oil prices up. Look at the economic data coming for next week. So again, markets are all closed Monday for Martin Luther King Jr. Day. Tuesday, nothing, just bond auctions, mortgage rates on Wednesday, mortgages. Thursday, typical jobless claims data. Friday, some global PMI data. Michigan sentiment, existing homes, and then we get Michigan sentiment. That'll probably be the most important economic data for this week, it looks like. So not a whole lot this week. Got earnings. We just kicked off the next earnings season. So we had all the major banks. So we'll probably get a lot of the smaller banks, regionals, and I highly recommend you go through this list. See if there's any other signatures. So again, some smaller banks, Citizens. There's Netflix, so the first of the Mag 7s. So Netflix on Tuesday. Or banks. P&G, J&J, so some consumer defensives. So again, highly recommend you take a look at the list, see how that might impact your trading decisions. Listen to the earnings, also the guidance. If anyone misses or lowers guidance, it'll negatively impact them as well as others in the sector. So again, you can hear how we trade around earnings in the link to the video in our notes. So far, like the financials have reported pretty good earnings. So we'll listen for any negativity. I think Target was a little weak. So some retail going forward, your mid-tier retail going forward might be weak. So I hope that all helps. Okay, let me grab a quick drink and we'll go through the market screen in Webull. Just a quick reminder, if you're not already using Webull, you can still get up to 40 free fractional shares of stock by opening and funding your account with as little as $2,000. Under 2,000, you still get 20 free fractional shares of stock, each worth $3,000 to $3,000. Also, again, they periodically offer additional promotions like bonus interest on your uninvested cash, etc. And if you'd use our affiliate link in the description box below, get all your free fractional shares of stock, any current promotions they're offering, and also help support our BeachBum trading community, which we greatly appreciate. So firstly, we'll look at the histogram from Friday. So we see we had 3,700 advancing, 25% or 2,500 declining. Percent of advancement was generally very small. Percent of decline pretty small. So it's interesting. The net inflow very steady on the Nasdaq. So rotation back into technology very strong and steady all on Friday. Whereas typically we see outflows out of the Nasdaq on Friday. So again, a strong rotation, probably buy the dip on all the Mag 7s, strongly into the Nasdaq. NYSE was positive and pretty steady, but much less than the Nasdaq on Friday. Also, we're still in fear. I thought this is interesting as well. So even though we had those exuberant runs in the markets and the indices all towards the second half of last week, the fear gauge is still showing fear. It's a little bit above. Previous week was 25, previous day 26, previous month 28. We're now at 33. Looks like the bottom was about the 14th. And again, when we got this PPI and CPI data, the fear did decline a little bit, but we're still in a fear range. So seems to be contrary to what we're seeing in both the VIX and the indices. So there could be some risk under the covers that this is picking up on. So again, protect your profits. Be careful. Another interesting enhancement I saw or change in the Webull market screen is they used to have the various treasury indices here. Now they've got the treasury yield curve. So now you can see the treasury yield curve here in the market screen in Webull. So you can see the various bond yields, 1 month, 2 month, etc. The 2-year, 10-year. So 10 years at 4.62, 20 years. So the basis is like TLT. And this is a little interesting. The 10 years or the 20 years at 4.9, 30 year at 4.85. So we've got a slight inversion between the very long end of the curve. So I thought that's an interesting enhancement. So again, just a quick reminder, you can also see the detailed earnings calendar for next week here in the market screen in Webull. So you can go day by day, see who's reporting earnings, their expectations, etc. So again, you can see the very near-term earnings calendar here in the market screen in Webull. We look at the best performing industries for the week. So home building did pretty well despite the high mortgage. Oil and gas, pretty good. Banking and the major financial banks did well, reported positive earnings. Construction doing, again, pretty well despite the high mortgage rates. Fintech, so looks like Bitcoin we saw back up over 100K. Again, probably an exuberant run into the inauguration, so a Trump 2.0 trade that we'll also discuss. Again, natural gas trending up. Again, construction positive, real estate positive. REITs rebounded, chemicals rebounded. Again, banking, utilities, so generally positive for the week, not a whole lot of negativity. Look at the ETFs. So right now we've got up on the NASDAQ, up on the Dow, up on the Dow, up on the S&P, again up on the NASDAQ, up on Bitcoin, up on volatility. So we, again, saw volatility drop, but now we're seeing an inflow into UBXY, leverage long on volatility, as we'll see. Current VIX is below the futures for the VIX. So it's got small up on the Russell, up on small caps. So industrial strong, rebound in industrials. Again, financials, weakness in healthcare. Here, real estate's pretty split. Energy pretty positive. Again, rebound in coal. So we see that positivity in coal. Communication services, utilities, tech. Again, rebound in basic materials. Lithium looks like there's a rebound in lithium, rebound in uranium. Defensive, so again, almost all positive with the exception of healthcare, some weakness in real estate, and a little energy on Friday. Commodities, we'll see corn's up, energy. Okay, just a quick reminder too, you can now trade 24 hours overnight trading in Webull. You can get more information about overnight trading in Webull via the link to the video in our notes. Also in this Discord posting that you can access via the link in the notes. Also, you can trade futures in Webull, so you can get more information about trading futures in Webull via the link to the posting in the notes. We'll quickly look at the futures in FinBiz. Okay, so we can see these downtrends in the indices and then these exuberant runs after the PPI and CPI data. So we were again making lower highs, lower lows. Dow looks like it made a little bit of a higher high, probably tests at 4,400 level. We'll see if that holds. S&P didn't quite make it up to its previous high. So again, we'll see if it's able to make a higher high or if it continues to make a higher low. Again, been in a downtrend. Similarly for the NASDAQ, hasn't tested its previous high. So again, right now the overall trend, long-term trend is down, even though we had that exuberant run on the lighter PPI and CPI data. Euro stocks market broke out. Nikkei just oscillating, been pretty flat. Russell tested its previous high and wasn't really able to hold that, got rejected down from that 2,300 level. So again, we'll see if it's able to make a higher high. Otherwise, again, downtrending on the Russell. DAX broke out, so the European stock market showing some significant strength. Again, we saw very steep decline in the VIX after that positive inflation data. The actual VIX now, I think, is at 15. We'll quickly look at the term structure. Again, quick reminder, you can find the VIX term structure link as well as other links to resources and tools in the link section of our homepage, beachbumtrading.com, bum without the U. So if we go down to reference links, find the VIX term structure. So again, we see the current VIX is down at 1597, so below 16, below the front month. Front month is in the 16s. Then we've got a positive contango going forward. This was significantly higher, but the overall trend is up. We look at the history just quickly. And today and yesterday, pretty much the same. Overlay the term structure. So again, up on the VIX going forward. So we saw that in the UVXY. So again, we saw oil briefly broke above 80 and retraced back down to 77. I wouldn't be surprised to see it retest that support level at 75. So we'll see, or if it's going to try to retest, re-break out of 80. But again, pretty rejected off of 80, trending back down, possibly to 75. Heating oil very strong and cold weather. And the trend in natural gas generally up, but a lot of volatility. So it broke up above 4, rejected, came down slightly below 4. But again, the long-term trend has been steadily up. And again, we've got cold weather. Also, one of the Trump 2.0 trades is opening up the LNG exporting again. That might be positive for natural gas prices. And we saw gold briefly broke above 2750, got rejected. We'll see. Right now it's ranging between about 2700 and 2750. See if it tries to break back out above that 2750 mark. And silver tested 32, got rejected. Probably come down again to 31 or so. Copper strong surge up and then quick rejection. Platinum and palladium, not quite as much of a reaction. Corn's up. A lot of the other ag products are up. Oats back up. Wheat popped up a little bit and got rejected. So this 540 level is pretty critical. See if that holds, if it bounces back up or retests the previous low. If so, again, we're watching that for a long using the WEAT ETF. Cocoa flat, sugar down. Although the long ETF we have for sugar is Cane, CANE, but the risk reward didn't look all that attractive. Again, we saw bonds prices finally rebounded, yields finally retraced from that 5% level. So if you caught that bottom in the long term, any of the bonds got to bounce back up. Although again, there's mention that there might be another retest of the 5% even on the 10-year. So we might see a retest again of those lower prices, but positive reaction again on that PPI, CPI data. Dollar remains pretty strong, tested that 110 level, still to 109. So despite these rebounds in the bond prices, dollar still strong. Euro, again, might test parity at some point with the dollar strength. Saw a rebound in the Japanese yen. So again, congratulations to any of our BeachBum traders who caught that bounce back up in the Japanese yen using YCL or the other ETFs or Forex trading. Again, we've got the Bank of Japan decision on the 24th. So this rebound might have been front running that BOJ decision. Other foreign currencies all very weak. So again, if we do get a weaker dollar, like we'll talk, that's another Trump 2.0 trade is a weaker dollar. Some of these other foreign currencies might swing back up. And so there might be an opportunity if you're a Forex trader or again, using ETFs to catch a swing back up in some of these foreign currencies. So I hope that all helps. Okay, I'm going to jump forward and let's talk about our theme for this week, and then we can come back and look at ETFs for these various trade opportunities for Trump 2.0. I'm going to grab a quick drink, and then we'll go through our strategy for this week on how to make money trading Trump 2.0. Welcome, Fairchild. If I missed you earlier, hope you're doing well and had a great trading week. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education, hopefully some entertainment purposes only. So our theme for this week is how to make money trading Trump 2.0. So previously, pre-election and also post-election, we talked about how to take advantage of what we call Trump trades. So in our notes back from post-election November, we talked about some of the Trump trades. So I'll quickly review those, and then we'll add to that list is how to make money trading Trump 2.0. So you can again go reference a previous discussion on Trump trades via the link in the notes. We also, again, have been discussing this for quite some time. So again, some of the positive Trump trades we've been talking about is oil and natural gas. So again, drill baby drill is one of his mantras. And we talked about opportunities with some of the service companies, SOB. In fact, SOB just reported good earnings. Halliburton, Exxon, Mobil, etc. Also, we talked about lifting the ban on exports of natural gas. So some of your LNG providers may get a pop off that. Obviously, it's been very positive for Bitcoin. Bitcoin ran up over 100,000 after the Trump election. Again, it looks like we're getting a run into the inauguration, back up over 100,000. And some of the other cryptocurrencies are also following suit. So all the cryptocurrency, Bitcoin related stocks got a pop again recently. Talked about nuclear. Trump seems to be pro-nuclear, so your nuclear stock, uranium providers, and again, we can look at some various ETFs. You could trade that theme. Again, positive for mergers and acquisitions. So we started to see more mergers and acquisitions. We can expect to see more. Also, less regulation. So companies, banks, etc., that benefit from less regulations. Some of the negatives, pharmaceuticals due to RFK. Also, we heard Biden, as one of his last actions, is putting more under the list of Medicare negotiation, again, negative for pharmaceuticals. So, again, drug manufacturers, major biotechs, and also that may limit the M&A in the biotech sector. Also, we've talked at length about tariffs and countries that may be negatively impacted by tariffs, and also companies with exposure that might be negatively impacted by tariffs, particularly China, also Mexico and Canada. There's been further discussions. So again, both the countries and the commodities and companies that are vulnerable to these tariffs, we expect, broad swath of tariffs to be announced on Monday, and then we'll see a reaction to that on Tuesday. So, and we would expect, retaliatory tariffs from China, from Europe, etc. And again, companies with exposure to retaliatory tariffs, as we've discussed, grains, soybeans, etc., other commodities traded in Europe. And you can access our discussion on U.S. exports in China. So some of the new Trump trades that I added to the list, or again, ways to make money trading Trump 2.0 is definitely expect increased volatility. So again, a lot of uncertainty. We hear different speculations on where he's going to apply tariffs, the degree of the tariffs, etc. Again, all kinds of other what we used to deal with Trump tweets. So now I don't know if they're tweets or on his True Social or whatever, but various statements, news, even coming out of the inauguration. We'll expect some statements that will increase volatility, both up and down. So can expect more exuberant runs up on positive statements and negative runs down on negative concerns, etc. He's also talked about clean coal, so commitment to reopen coal in West Virginia, Pennsylvania, etc. And we talked about an opportunity in that area. We'll look at again tomorrow. Apparently, he wants a weaker dollar, but we've seen the dollar actually strengthen recently. So we'll see what he does to possibly create a weaker dollar. Again, dollar strength negative for companies that export, positive for countries and companies that import. Also, he's talked a lot about a crackdown on illegal immigration, mass deportations, etc. That's positive for companies that have to do with border security. So I know also there's speculation on private prisons. There's a couple companies related to private prisons. I think one's like GovX or something similar to that. So other positives related to border security may benefit. A potential negative might be a tighter job market, possibly a source for wage price inflation. So watch for that tighter job market due to less lack of immigrants. Also impact potentially with H-1B visas. So some tech companies hire a lot of H-1B visas. If they crack down on that, might again tighten the job market, increase wages, positive for job seekers, but again possibly a source of inflation. A lot of talk that he wants to try to end the Ukraine-Russia war somehow, and so that may be positive. We'll have to see what kind of deal comes out of that. If some of the products, agricultural, etc., starts flowing out of Ukraine again. Also, the energy from Russia, if he reopens sanctions on Russian oil, etc., could be more supply, could be a negative on oil prices. So we'll have to see what the impact of that is. It's very negative for clean energy. So you heard him comment, he's not hip on wind, solar, all the subsidies for that. So it's very negative for all the clean energy stocks, companies, etc., solar, wind, etc. Also, another comment I wanted to make was on this Department of Government Efficiency, DOGE. They're going to be looking at cutting spending, making the government more efficient. And one thing I wanted to point out from having some experience in the defense contractor world is there's a lot of potential fluff, well, I'll say fat in government contracts that may be a target of these. I think there was mention of the F-35 program possibly killing the F-35 that's had major cost overruns, etc. So some of your major defense contractors, Northrop, Lockheed Martin, Raytheon, L3 Harris, may see cutbacks in some of these defense contracts, might see tighter restrictions on their costs. So again, might be significantly negative for defense and government contractors. So we'll have to listen to where else they target. But I don't think people are focusing on the negativity. Also, that could trigger layoffs in those government contractors, defense contractors. So that could be a negative for the job market, the employment picture. And again, not something I think most people are talking about or thinking about. So please let me know what do you think of these Trump trade ideas? What other ideas you may have for how to make money trading Trump 2.0? Please put those in the comments to this video or in our Discord. Again, we can discuss all topics related to trading 24/7 in our Discord. So I'd love to hear if you have any other ideas on positive or negative impacts of Trump 2.0 and how we can make money trading in this Trump 2.0 regime for the next 4 years. So again, I hope that all helps, and I'd love to hear your feedback on these trade ideas. Okay, now we'll go back and look at ETFs. So we've got some trade ideas, some trade strategies for this trading week, and now we identify some possible trade opportunities, be they long or short, and we can jump over to our ETFs Google Sheet, find an ETF with the risk reward profile, the composition, etc., that we like to trade that trade idea. And you can do likewise, get 24/7 access to our ETFs Google Sheet by joining our Patreon. So let me grab a drink, and if there's anyone in the chat who has a particular topic, theme, ETF, etc., commodity for which you want to look at ETFs, please throw those up in the chat. We can take a quick look at those in our ETFs Google Sheet. Okay, I'll try to keep an eye on the chat and see if anyone has a particular topic you want to look at ETFs, but I did want to focus on a few from our Trump 2.0 Trump trades topic. So firstly, let's if we just go through kind of the list. Wanted to look at nuclear. So we've got a list of uranium ETFs, so long uranium, uranium miners, etc. So URA, URNM, URNJ, uranium miners. We've also, if you want to trade the nuclear theme, again, I know that's a hot topic right now as well. So you can look in our research tab. We've got a variety of ETFs that we've looked at for the theme of nuclear. It's under uranium, so they're all under uranium. So NUKZ. It's also a leverage long on URA, URAX, also NLR, uranium and nuclear. So if you search for uranium or nuclear, that theme, that's again positive from Trump. So you can find a variety of ETFs to trade that theme in our ETFs Google Sheet. Got all kinds for oil and gas. So again, if you want a long oil, got a variety of longs, Gush, UCO, USO. Again, tends to be volatile. So short with drip or SCO. Natural gas, long with oil or UNG or UNL. Short with cold, again, very volatile, so trade accordingly. Again, negative for pharmaceuticals, import exports pretty specific to a company, various countries. Now China did report some a little better than expected economic data. So we saw a trend back up in China. So yen is the long on China. Yang is the short on China. We've got a couple others that you can trade. Talked about coal, positive in coal. We're watching MET-C, looking for an opportunity. This is a coke and coal company, also has some rare earth material exposure. We'll talk about that again tomorrow. One we're watching for that coal theme. Also Peabody is BTU. Watching this cannabis MJ, but it's just not really trending back up yet. Positive on Bitcoin. We've got a number of Bitcoin and cryptocurrency ETFs. You can trade long BITO or BITX or WGMI for miners, short BITI. And biotech trending down, so that's Lab D. Watching again these defense, we've got some long defense contractors are still relatively high, so that comes back down. Brazil did bounce back up a little bit, so again, have to hear how tariffs impact some of these countries. And other cryptocurrency, Block, BitQ. Again, strong dollar, generally negative for emerging markets with high dollar-denominated debt. Again, if the euro comes down, trade that long with ULE. Risk reward's not all that great. Again, junior miners continue to lag a little bit. I've seen some of the individual gold, silver miners start to perk up a little bit. Got junior miners, ETF JNUG. Saw lithium, some attention back in lithium. Mexico, again, vulnerable to both tariffs and the border security issues. So again, natural gas, long boil or UNG, UNL, short with cold. Silver, and silver miners flagging a bit. SILJ. Okay, negative for clean energy and solar, so like TAN and those, negative for those. Again, sugar, even though it's down, well, it's pretty close to its 52-week low, but the risk reward's only 1.3, so it'd have to get significantly lower to really be attractive. Steel, again, rebounded some. Also got individual stock ETFs, so you can find a variety of single stock ETFs, so you can long or short stocks like Tesla, NVIDIA, etc. Search for them in our ETFs and our research sheet. And we saw a rebound in the treasuries, so TLT up a little bit, TYD up a little bit. You think we're going to get a retest to that 5% level if you want to short different durations of the bonds. Got a variety of ETFs, different durations of bonds. If you think, again, prices are going to decline again, yields bounce back up. And we've got the uraniums, again, dollar. If you think the dollar will weaken, we've got an ETF UDN to short the dollar, or UUP, long on the dollar. Give volatility, we expect increased volatility. So UVXY, VXX, and it spikes. You want to short it back down, SVXY, SVOL, etc. So if we do get one of those spikes in volatility, SVXY or SVOL would be our go-tos to short volatility. Okay, we're watching wheat, see if it comes back down to that 52-week low. If so, we'll take a long in wheat using WEAT. And again, the yen did bounce up now. So YCL is back up quite a bit off its bottom. So again, if we happen to see a dip back in the yen, I would definitely take a long on the yen going into that BOJ decision on the 24th using YCL. So I hope that all helps. If anyone in the chat has any other last minute ETFs you want to look at or topics, we can look at those quickly, or if you have any other questions. Otherwise, we hope that you like this content. We hope that you'll smash the like button for us, help us try to get the YouTube algorithm to show us some love someday, and share our content with more traders around the world. Also, we need your feedback on what we can do to improve our weekly trading game plans, any of our videos, our tools, our Google Sheets, our community, etc. Please put those in the comments to any of our videos. Also, if you'd like us to take a look at any individual stocks or ETFs, etc., to add to our research or look at for our part 2, please put those in the comments of the video or in our Discord. Please tag us in our Discord. We're BeachBum Trading, all lowercase, no other numbers, characters, symbols, etc. Anyone else is an imposter, please report and ignore them. We also need your help to share our content with additional BeachBum traders. Continue to build our BeachBum trading community. Please repost our content on your social media sites. Invite other traders to join us in the live chats. Join us in our Discord, etc. Let's continue to build our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So thank you to everyone that participated in the chat, everyone that's watching after the fact. We hope you'll come back again tomorrow for part 2 of our weekly trading game plan for this trading week, where we'll be taking all of our market analysis, our trade ideas, trade strategies on how to make money trading Trump 2.0, and we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we use dividend payers and various option strategies to generate income while we wait for our swing trading stocks to set up. So again, we hope to see you all back 10 a.m. on Sunday for part 2 of our weekly trading game plan. Thank you again, and have a great day.